morning, Shawn. Thank you so much for your time today. This is Shawn McGeehan with Fifth Third Bank. He is a senior loan officer. He has really quickly made his way into the JS Group family, especially this year. And we're excited to sit down and have a quick little morning discussion. How are you today, Shawn?
Doing great, Jill. Nice to see you.
All right, great to see you. Wanted to get you on here because obviously, pulling up my notes here, we are experiencing some very, very strange, unique market trends that I don't think people were prepared for. And it is obviously causing a massive ripple for the real estate residential industry, as well as your industry. So I thought it'd be advantageous for our clients to be able to hear from your mouth directly what's been going on behind the scenes and some of your predictions. But before we start, tell us just a little bit about who you are, Shawn. We have really appreciated your expertise and your friendship, and would love to hear more about who you are.
Sure. Thanks, Jill. It's nice getting to know you guys too. I'm Shawn McGeehan. I'm at Fifth Third Bank in Chicago. We are the second largest footprint bank in Chicagoland, next to Chase Bank. And I've been doing mortgages since 2005. I originally started as a teacher out of college and transitioned over to mortgage and never looked back after that. At Fifth Third, I work with a lot of higher net worth clients, private banking clients. I'm a private banking loan officer here at the bank. So a lot of the clients that work with us get certain things and discounts by working with the private banking channel. We work with a lot of the commercial clients at the bank as well. So we're very proficient at working with more complex tax returns and giving white glove service to clients like that. And that's a little bit about me.
Okay, great. Yeah, you've definitely been extremely helpful with many of our clients. So we appreciate your white glove service and everything that you've been able to provide. So obviously everybody is extremely concerned that we are on the edge of a recession. What is your perspective on that? Do you think that's where we are heading?
Yeah, so, I have a lot of different thoughts on this. There's a lot of uncertainty going on, and it's multiple factors that are all kind of overlapping each other. It's mortgage rates changing at a very rapid pace, going up and down. The market being pretty overheated for a while, and now maybe some normalization is happening. And who knows what's going to happen with Ukraine and oil and future inflation and the Fed. So there's lots of uncertainty. The first thing I'll say about that is when in any mortgage transaction and home buying transaction, you want to make sure you have the right team on your side to advise you through these confusing times. Because a lot of us have been through these kind of things before and kind of seen the playbook before. Mm-hmm. As far as recession coming, it's hard to tell. A definition of a recession is there's the definition and then how deep it is and how long it goes for, but it's got to have 2 negative quarters of GDP. Part of me says, I don't know if it matters if we go into recession or not. And how does it affect real estate? That's the context we're talking about here. We know how it'll affect the economy and everything, but how does it affect your home purchase and the home that you own? There's the simultaneous shortage of homes too. And if you're in a recession, you're still looking at economics 101 with the supply and demand. So we might not see home values crash necessarily, but we might see appreciation normalize. We're not going to see this extra boost of appreciation like we've seen last few years. I don't know how you guys feel about this, but I think that's how we look at it right now. We still see real estate as a very safe investment for people. The thing that caused the big crash in 2008 were people's ability to pay on their mortgage. Mm-hmm. And that caused an abundance of foreclosures. And that's what dropped home values. And we're not in that situation right now. Like the mortgages that are out there are diamonds. They're all, I think the average credit score for agency loans is like in the mid sevens, like 740s, 780s. LTVs are great. Everything, all the metrics are very solid compared to 2008. So I don't think we see an abundance of foreclosures coming again like we saw before.
Yeah, and to that point, even I wasn't selling real estate in 2009, but even when things were at the worst, neighborhoods that we do a lot of business in, such as Lincoln Park, were really only down between 5 and 10% at the bottom. So I do feel like a lot of Chicago's neighborhoods are insulated and almost protected from some of these factors. So I don't really see pricing becoming astronomically different than where we're at today. Obviously, there will have to be some corrections, but those aren't always a bad thing. Now, let me ask you this, because we've always heard to date the rate, marry the house. How do you respond to that in terms of people getting into a situation today where their rate is a lot higher than where they ideally would like it to be? How are you going to be able to play a role in adjusting that or normalizing it, if you will, down the road?
Sure. So I always tell people you can never go back to renegotiate the purchase price, but you can always refinance the mortgage. So that's it. That's in your favor. So today, rates are our rates are competitive for the market. We do want to win deals, but that being said, overall rates are high, and we're predicting sometime in the next 12 to 18 months, there's probably going to be another big refinance opportunity for people that are closing their loans today. So we try to recommend people to, keep that in mind when they're closing on their little higher interest rate today. We do have some special programs too that about that can help mitigate some of these interest rate issues that we're having today. One of them in particular is our jumbo 15-year ARM. So, there's people typically gravitate towards 30-year fixed rates for the certainty of that. ARM rates are lower than 30-year fixed rates, but they're adjustable. So there's the allure of a lower rate, but you have the volatility of the adjustment too that people don't always want. So we've created a 15-year ARM. It's a portfolio product that we keep ourselves. So it's fixed for 15 years and adjustable for the following 15. And that gives people a very long runway of certainty with the interest rate. And any time between now and the 15 years, they can refinance it. They can refinance immediately. There's no prepay penalties. So when rates come back, we can revisit to see what options are available at that time. Maybe we convert it to a 30-year fixed that's lower at that time. Maybe we do another 15-year ARM. So,
Sure.
And with the 15-year ARM too, it's pretty much replacing everybody's 30-year fixed option at this point that qualifies for this program. The rate's substantially lower than the jumbo. It's usually, it changes every day, but it hovers between a half point to over a point lower than the 30-year fixed option for that day. It just kind of depends on what the market demand is for that. So on $1 million loan, that could save you $1,000 a month of interest. It's pretty dramatic. We're not talking about like a cup of coffee here. We're talking about pretty big savings, pretty big numbers. So, we've been doing a lot of that right now to help mitigate some of the risk on the rates.
Okay, amazing. Any concluding thoughts for buyers right now, especially if they're on the fence, making that decision between renting again or making their first home purchase?
Yeah. So if it's a first-time buyer and they're renting, I would just consider, you're going to pay for housing one way or the other. You're either going to pay for it through your rent, or you're going to pay for it through a new home. And both of those are going up right now based on inflation. So the benefit of owning a home is that you're locking in that your cost basis instead of having some kind of unpredictable increase in housing expense like you would if you're a renter. So I would encourage people to think of it that way. And and talk to your advisors, talk to me and your people like yourself about, what their options are and what to do next.
Amazing. Well, we are extremely excited, Shawn. You'll be a preferred partner for our client appreciation event this August. So we're excited to see you and your family then. Thank you for being here, and thank you for working hard for our clients. And we look forward to a lot more deals together soon.
Thank you, Jill.
Perfect.
Have a great day.